Okay, well, Dean Kim is now joining us. He's head of global research product at William O'Neill and Company. Dean, good to have you with us here. Thank you for your time. Just sort of weigh in on all that has been happening, on what we've outlined. The big story is the massive rise, the continued rise in yields on the dollar. And I don't know if you've gone back and looked at whether after such a sharp rise in a short time span, yields especially retrace. At least that's what anecdotally I remember. Your thoughts? Are we close to a bit of a top here?
Well, the problem is the 10-year bond yield currently sitting at 4.8% or thereabouts, but the next resistance is actually 5.25%. And so, the bond yield can quickly accelerate to 5.25. And given the fact that the Fed is poised to raise on another 25 basis points next month, we think it's more of a probability that we will get to 5.25 before we see any kind of retracement. Of course, August job opening numbers today, more than expected, doesn't help. But we're hoping to see Thursday and Friday where initial jobless claims and payroll numbers that may actually come in cooler, and that may settle the bond market. But from a technical perspective, I think the yield has a fair chance of getting to 5.25. Now, going forward, the inflation is coming down, but it's not coming down fast enough. And so when people talk about rates staying higher for longer, that's probably more of a scenario than not. So, in terms of retracement for the bond yields, we'll see what happens Thursday and Friday, but it may stay up longer than we'd like.
Okay. Dean, hi, good morning, and thank you for joining us on the show. I wanted your thoughts on the chart of the Dow, because, we've seen significant pressure there. It's not as bad, perhaps, as what we've seen in the past, but in the last 1 month, the Dow is down almost about 5%, right? And now hanging at that 33,000 level, it's become negative for the year as well. Do you see more pressure in the near term? If yes, what are the levels that you're watching?
The Dow is very troubling because it's made up with very large companies, particularly financial companies. Now there's a huge headwind where the market is pricing in for more defaults in commercial real estate sector. And so, in fact, the defaults are going up now. That is not great news for large cap banks. And when I look at the S&P 500, it's poised to sort of retrace down to the 200-day moving average. So, in fact, that's the next level of support for S&P. I think we're going to have to go through some period of pain before we see a turnaround. But the commercial real estate worries, that's beginning to resurface.
Hi, Dean. Good morning. S&P 500 can drift down to the 200-day MA. What about the Nifty? How's it looking? How deep can we go, if at all we do need to correct?
Yeah, I think for the Indian market, what I've noticed is this bit of a pullback. It was on low volume, so I continue to see Indian market as being very resilient. The next support on the Sensex would be the rising 100-day moving average, which is only 1% away. There is a bit of a price support, 3% away. But I'm glad to see the volume is actually not that big in terms of this sort of consolidation. And I think if you do see a bounce off the 100-day moving average, that's a great sign. However, if the Sensex starts to break down below the 100-day moving average, that would be your signal to start trimming positions.
Okay, and what about crude oil prices? That's a worry here in India. When it was at around 70, everyone said it's going to top out at 80. Then we saw 90. And a few days ago, we saw $97 as well. Do you think that the peak is done in the near term and we could retrace from here? Because you've seen that numerous times in the last 12 months.
Yeah, right now oil is sitting at a particularly precarious situation because the next resistance is actually $95 if I look at sweet crude currently sitting at 89. So that's a big jump. And so there's a gap between current point and $95. So unfortunately, we may see that. Given the fact that the OPEC countries continue to cut back on production. So that is going to be a bit of a sticking point in global markets, and that doesn't help with U.S. inflation either. But let's see what happens. I think oil price it is sort of in a dire situation at the moment because the next resistance is at 95.
All right, we leave it at that. Thanks a lot for joining in, Dean. Appreciate your thoughts. Not looking like it's going to be a good start this morning. The GIFT Nifty suggesting an over 125-point cut. But we'll take it from there. Let's take a short break. Many stocks in focus, so don't go anywhere. We'll be back in a bit. What happened?